Most traders don't fail loudly, they fail quietly. Their accounts don't explode in one dramatic moment. They bleed out slowly, trade by trade, decision by decision, until one day they wake up and realize they've been busy for years but built nothing. That's the uncomfortable truth the trading industry avoids, and it's why this conversation matters. If you've ever searched for consistency, struggled with discipline, or wondered why doing everything right still feels wrong, then what you're about to hear is not motivation, it's orientation. This is Trading Rebels, and today we begin something deeper than strategy. We begin blueprint thinking, not tactics, not tricks, a way of becoming the intentional trader. Here's the question most traders never ask themselves, but should. What exactly is governing my behavior when I sit in front of the charts? Not what rules you wrote down, not what course you bought. What is actually in control when price moves against you, when opportunity appears unexpectedly, when fear or excitement shows up uninvited? Because whether you realize it or not, something is always in control. Chaos or structure, impulse or design, reaction or authorship. Most traders believe they are trading the market. In reality, they are being traded by randomness. They wake up every day hoping today will be different, but they carry the same internal disorder into every session. They have indicators, watch lists, confirmations, yet no governing architecture. And without structure, effort becomes noise. Hard work becomes motion without direction. It feels like progress, but it produces no compounding result. Structure is not rules. This is where the confusion begins. Rules are statements. Structure is a system of constraint and permission. Rules tell you what you should do. Structure determines what you can do. A trader without structure is like water without a container. No matter how pure the water is, it spreads, evaporates, and disappears. Structure is the container that gives your behavior shape. When traders say they lack discipline, what they really lack is structure. Discipline is what you ask of yourself in the moment. Structure is what you decide in advance, so the moment has no power over you. This is why discipline always feels exhausting. You are trying to overpower uncertainty with will, and will always loses to emotion when pressure rises. Think about this honestly. When you break your rules, is it because you forgot them? Or is it because the situation demanded a decision your system never resolved in advance? Most traders enter trades without fully exiting uncertainty. They leave too many decisions open-ended. They don't know exactly what invalidation means. They don't know what conditions cancel their participation. They don't know what market behavior disqualifies the setup. So when price moves, they improvise. And improvisation is where impulse lives. Summoning structure is the act of ending improvisation. It is deciding before the market opens who you are allowed to be today as a trader. It is choosing constraint over freedom, because freedom without structure is just chaos wearing a motivational mask. The intentional trader does not ask, "What do I feel like doing?" He asks, "What does my structure permit?" This is where the rebel separates from the crowd. The average trader wants more opportunities. The rebel wants fewer, but repeatable ones. The average trader wants flexibility. The rebel wants restriction. Because restriction creates clarity, and clarity creates consistency. Structure reduces choice, and in doing so, it reduces emotional exposure. Here's something most people won't admit. Randomness feels exciting. Structure feels boring, and that's exactly why structure works. The market does not reward excitement. It rewards repeatable behavior aligned with probabilistic advantage. If your trading feels thrilling, it's usually because something is uncontained, and what is uncontained will eventually turn against you. Summoning structure begins with an uncomfortable audit. You must ask yourself where your behavior is still negotiable. Where are you still making decisions on the fly? Where are you still seeing how it goes? That phrase alone has destroyed more accounts than bad strategies ever could. Seeing how it goes is surrendering authorship. It's allowing the market to decide who you will be today. The intentional trader does the opposite. He decides in advance how he will behave under pressure. He defines his engagement criteria so tightly that most market movement becomes irrelevant noise. He does not need to be everywhere. He needs to be precise. Structure is precision applied to behavior. And let's be clear, structure does not make you rigid. It makes you sovereign. Because now you are no longer reacting to every fluctuation. You are responding only to what aligns with your design. The market can move however it wants. Your participation is no longer automatic. It is conditional. This is why so many traders feel overwhelmed. They are exposed to everything. Every candle, every time frame, every opinion. Structure narrows perception. It teaches you what to ignore, and ignoring correctly is one of the highest forms of trading intelligence. If you are honest, you'll realize most of your losses didn't come from bad analysis. They came from bad engagement. You entered markets you had no business engaging. You managed trades you never structurally defined. You stayed in environments where your system had no authority. Structure is how you reclaim authority. This is the first step in becoming an intentional trader. Before probability, before execution, before identity, you must summon structure. Not as a concept, but as a lived boundary. Something that governs you even when you don't feel like being governed. Something that remains intact when emotion arrives uninvited. This is not about adding more rules. It's about designing a behavioral architecture that makes deviation costly and alignment natural. When structure is present, discipline becomes redundant. You are no longer forcing yourself to behave. You are simply operating within what you have already decided. So here's the reflective question I'll leave you with as a rebel. If I removed your emotions from the equation tomorrow, would your trading still function? Or does your system secretly depend on you, feeling confident, calm, or motivated to work? If the answer is yes, then structure is missing. And until structure is summoned, nothing else matters. Probability will feel random. Execution will feel stressful. Identity will feel fractured. But once structure is in place, everything else begins to align. This is the blueprint, and this is only the beginning. Once structure is summoned, something subtle but powerful begins to shift. The market stops feeling like a casino and starts behaving like a field of known conditions. Not certainty, not guarantees, but boundaries. This is where most traders get confused, because they were taught to chase accuracy instead of command probability. They want to be right. They want clean wins. They want validation. But trading has never been about being right. It has always been about being aligned with advantage long enough for probability to express itself. The average trader asks, will this trade win? The intentional trader asks, does this trade belong to my statistical edge? That difference alone separates emotional participation from designed engagement. Probability is not luck. It is structure interacting with repetition. Without repetition, probability collapses into hope. Without structure, repetition collapses into randomness. Here is the uncomfortable reality. Most traders do not actually trade probability. They trade outcomes. They take one trade and mentally attach their self-worth to it. When it wins, they feel intelligent. When it loses, they feel defective. This is why a single loss can destabilize an entire week. They were never trading probability. They were trading ego. Commanding probability means divorcing meaning from individual outcomes. A single trade is meaningless. 10 trades are still noisy. Probability only reveals itself across a series governed by the same conditions. This is why inconsistency persists for traders who constantly tweak, adjust, or override their systems. Every change resets the statistical clock. They never allow probability to mature. Think about this honestly. How many times have you abandoned a method after 3 losses? Or doubled risk after 2 wins? That is not probability thinking. That is emotional bargaining. And the market does not negotiate. The rebel understands something fundamental. Probability does not respond to desire. It responds to discipline enforced by structure and expressed through repetition. You do not command probability by predicting the market. You command it by controlling your behavior across time. The only thing you can govern is your participation. Everything else is noise. This is why backtesting without behavioral consistency is useless. Many traders have data but no discipline of execution. They know their edge works on paper, but in real time, they interfere. They skip trades, they overtrade, they size emotionally, and then they blame psychology. But psychology is not the root problem. Lack of probabilistic commitment is. Commanding probability requires something rare: patience with boredom. Real edges are not exciting. They are repetitive, dull, and emotionally unrewarding in the short term. That's why most traders abandon them. They want stimulation. not sustainability. The rebel chooses sustainability, even when it feels slow. Here's where the shift happens. Once you accept that probability does not care about today, you stop forcing today to matter. You stop chasing recovery trades. You stop needing to end the day green to feel competent. You realize that the only meaningful question is whether you executed your edge as designed. And this is the moment where Trading Rebels separates from the noise. If this perspective is hitting home, if you're realizing that your problem was never the market, but your relationship with probability, then this is your invitation. Subscribe to Trading Rebels, share this with someone who's still chasing wins instead of building edges, and comment below with the question you've been afraid to ask about consistency. This channel exists for traders who are done gambling and ready to command their outcomes through design. Now let's go deeper. Probability is not something you hope for at entry. It is something you build into your system before the trade exists. Your edge must define when you participate, when you stand aside, how much you risk, and when you stop. If any of these are flexible in the moment, probability leaks. The market will exploit that flexibility every time. Most traders believe they lose because the market changed. In reality, they lose because their execution changed. They widen stops, reduce position size, or hesitate on valid setups. Each deviation may seem small, but across a series it destroys expectancy. Probability is fragile. It requires respect. This is why the intentional trader measures success differently. He does not ask, "How much did I make today?" He asks, "How faithfully did I execute my model?" Profit is the byproduct, not the objective. When profit becomes the objective, probability collapses into pressure. There is a quiet confidence that emerges when you truly command probability. Losses stop feeling personal. Wins stop feeling euphoric. Everything evens out into process. You stop reacting to the market and start observing it through your framework. This is not emotional numbness. It is emotional maturity. And here's the paradox most traders miss. The more you surrender your need to control outcomes, the more control you gain over results. By committing to probability, you escape the tyranny of single trades. You stop asking the market to validate you. You validate yourself through execution. This is why most traders never scale. They cannot stay consistent long enough for probability to compound. They reset emotionally after every trade. The rebel compounds behavior first. Capital follows. If you are still measuring your trading in days instead of distributions, you are fighting probability, not commanding it. The market does not pay daily wages. It pays statistical salaries. So reflect on this. If I removed your last 5 trades from memory, would your system still make sense? Or are you secretly adjusting based on recent pain or pleasure? If your behavior shifts after every outcome, probability will never stabilize. Commanding probability is not about being fearless. It is about being faithful to design. It is about trusting that repetition under structure produces results even when individual outcomes do not cooperate. This is the second pillar of the Rebel's blueprint. Once structure exists, probability becomes accessible, but only to those willing to commit without immediate reward. And if that idea makes you uncomfortable, good. Discomfort is often the doorway to alignment. The blueprint continues. Most traders think impulse is the act itself, the revenge trade, the early entry, the oversized position. But impulse doesn't begin at the click of the button. It begins much earlier, in the spaces where structure was never fully sealed. Impulse is not a personality flaw. It is a design failure. And until that is understood, traders will keep fighting themselves instead of fixing the system that keeps putting them in that fight. Impulse thrives in ambiguity. Whenever a trader says, "I'll decide when price gets there," impulse has already been invited into the room. Whenever risk is adjustable in real time, impulse is present. Whenever exits are vague, impulse becomes the decision maker. The market doesn't trigger impulse. Uncertainty does. And most traders live inside uncertainty without realizing it. This is why telling traders to control their emotions never works. You cannot suppress impulse consistently. You can only starve it. And impulse is starved by clarity, not effort. The intentional trader does not rely on emotional restraint. He relies on pre-commitment. He removes choice where choice creates danger. Think about how impulse actually feels. It feels urgent. It feels justified. It feels intelligent in the moment. Impulse always arrives with a convincing story. This one looks different. The market is about to move. I'll just manage it closely. These are not reckless thoughts. They are rationalizations. And that's what makes impulse so dangerous. It doesn't feel like sabotage. It feels like initiative. The rebel learns to recognize that voice not as intuition, but as the nervous system reacting to uncertainty. True intuition does not rush. Impulse does. True clarity does not beg for action. Impulse demands it. Once you see this distinction, you stop romanticizing spontaneous decisions. You begin treating them as system violations. Most traders believe experience will kill impulse. It won't. Experience only makes impulse more sophisticated. An inexperienced trader clicks impulsively. An experienced trader delays, explains, and still clicks impulsively. Without structure, experience just gives impulse better vocabulary. Killing impulse requires one brutal commitment: removing discretion at the point of execution. This does not mean becoming robotic. It means relocating discretion to the design phase, not the live environment. The intentional trader thinks deeply before the session, so he doesn't have to think emotionally during it. Ask yourself this honestly. How many of your losses came from trades that technically almost fit your plan? Almost is the breeding ground of impulse. Almost is where rules bend, logic stretches, and probability leaks. Structure does not tolerate almost. It deals in qualified or disqualified. Nothing in between. Impulse also feeds on time pressure. The fear of missing out is not fear of loss. It is fear of exclusion. It is the belief that this moment is special and unrecoverable. Structure dismantles that belief by grounding the trader in recurrence. When you know another opportunity of the same type will come, urgency evaporates. Impulse loses oxygen. This is why rebels are patient without trying to be patient. They are not waiting for something magical. They are waiting for alignment. And alignment has rules. It either exists or it doesn't. There is no emotional negotiation. If this is resonating with you so far, take a moment right now to like this video. It helps this message reach traders who are still blaming themselves for problems that are actually structural. And it tells the algorithm that this kind of thinking matters. Impulse is also deeply tied to identity. When traders feel the need to prove something, to recover losses, to validate intelligence, to justify time invested, impulse becomes aggressive. Trades stop being decisions and start becoming statements. I know what I'm doing. I won't end the day like this. The market owes me. These are not trading thoughts. They are identity defenses. The intentional trader removes identity from execution. A trade is not an expression of who he is. It is an expression of what his model does. This separation is critical. When identity is attached to outcomes, impulse will always find a way in. Another overlooked source of impulse is overexposure. Too many markets, too many timeframes, too much information. When the mind is overstimulated, it seeks relief through action. Clicking becomes a form of release. Structure simplifies perception. It reduces noise. It narrows focus. And by doing so, it calms the nervous system without effort. Killing impulse is not about becoming colder. It is about becoming clearer. It is about designing an environment where the wrong action is harder to take than the right one, where deviation feels uncomfortable, not alignment. This is why rebels log behavior, not just results. They track violations, not just losses, because a profitable impulsive trade is more dangerous than a disciplined losing one. It reinforces the very behavior that will eventually destroy consistency. The intentional trader would rather lose correctly than win incorrectly because he understands what compounds. When impulse is killed, something surprising happens. Trading slows down, stress drops, confidence stabilizes. Not because the market became easier, but because internal conflict disappeared. You are no longer arguing with yourself in real time. You already decided who you would be. And this is the turning point for many traders. The moment they realize that freedom in trading does not come from doing whatever you want. It comes from no longer wanting what violates your design. Impulse is loud. Structure is quiet. One demands attention. The other commands respect. And the more you operate under structure, the weaker impulse becomes. Not because you fought it, but because it has nowhere left to stand. This is how impulse dies. Not dramatically, not through force, but through irrelevance. And with impulse removed, Execution becomes clean enough for something greater to emerge. The blueprint continues. At some point in every trader's journey, a quiet realization surfaces, usually after years of frustration. No one is coming to save you in the market. There is no referee, no fairness committee, no external authority ensuring outcomes align with effort. The market offers opportunity, not justice. And the moment you truly accept that, authorship becomes unavoidable. Either you author your execution, or the market authors it for you through pressure, randomness, and reaction. Most traders believe they are executing when they click buy or sell. They are not. They are responding. Execution, in its true sense, happens long before the order is placed. It happens when you decide the conditions under which you are allowed to act, and just as importantly, when you are not. Authorship is the shift from reacting inside the moment to commanding behavior across moments. A trader without authorship is always late. Late to entries, late to exits, late to understanding why something worked or failed. They are forever catching up to price, catching up to emotion, catching up to consequences. This creates a perpetual sense of urgency, and urgency is the enemy of clean execution. When you are rushed internally, you surrender control externally. Authorship begins the moment you stop asking the market questions it cannot answer. Questions like, what will price do next? Or is this going to work? These questions place authority outside yourself. The intentional trader asks different questions. Does this align with my design? Is this condition qualified? Is execution required here, or is restraint the correct action? These questions return authority to the trader. Execution is not bravery, it is obedience to design. And that is where many traders struggle, because obedience sounds passive, it sounds submissive. But in trading, obedience to structure is sovereignty. It is the highest form of control available. You are no longer negotiating with fear or greed. You are following authorship you already established. Most execution errors do not come from lack of knowledge. They come from internal negotiation. The trader sees the setup, then hesitates. Or they don't see the setup, but force a trade anyway. Both are failures of authorship. In one case, the trader does not trust the design. In the other, the trader overrides it. Either way, execution is no longer authored. It is compromised. This is why so many traders feel inconsistent even when their strategies are sound. Their execution has too many authors. Emotion authors some trades. Logic authors others. Fear steps in after losses. Confidence steps in after wins. The result is a fragmented execution identity. No single authority governs behavior across time. The rebel resolves this by centralizing authorship. One system, one model, one set of permissions. Execution becomes binary. Either the condition exists and action is taken, or it does not, and restraint is executed instead. Yes, restraint is execution. Not trading when conditions are absent is an authored decision, not a lack of courage. This is where traders misunderstand confidence. Confidence is not feeling certain. Confidence is trusting your authorship even when outcomes are uncertain. The intentional trader does not need emotional confirmation to execute. He needs alignment. And alignment is structural, not emotional. Authorship also removes the need to explain yourself to the market. Many traders execute with commentary running in their heads. They narrate every candle, justify every decision, argue with price. This mental noise is a sign that authorship is weak. When execution is authored, silence replaces narration. You are no longer persuading yourself. You are carrying out instructions. Another critical aspect of authorship is acceptance of consequence. When you author execution, you also author responsibility. There is no blaming the market, no blaming news, no blaming timing. Outcomes become feedback, not verdicts. This is liberating, not heavy, because now improvement is possible. When execution is reactive, there is nothing to refine, only emotions to manage. Authorship also demands that you separate execution quality from outcome quality. A good execution can lose. A bad execution can win. The intentional trader understands this distinction deeply. He evaluates himself on execution fidelity, not profit fluctuation. Over time, profit follows fidelity, but only if fidelity is protected even when it feels unrewarded. This is where many traders sabotage themselves. After a string of losses, they loosen authorship. They widen criteria, skip rules, or seek confirmation from outside sources. This is execution abdication. It feels like adaptation, but it's actually fear wearing the costume of flexibility. True adaptation happens in review, not in live execution. Authorship requires delayed adjustment. You do not change the rules while the game is being played. You finish the series, collect data, and then refine. Anything else is interference, and interference destroys statistical clarity. The moment you truly author your execution, trading becomes strangely simple. Not easy, but simple. The complexity moves upstream into design. Live execution becomes procedural. This is why high-level performers in any domain look calm under pressure. They are not improvising. They are executing authored processes. This shift also changes how time feels. You are no longer rushing to the next trade. You are not bored when nothing happens. You are not anxious when volatility expands. Your job is no longer to make something happen. Your job is to respond correctly when structure calls for it. That reframing alone eliminates enormous psychological friction. Authorship is also where integrity enters trading. You are no longer cutting corners, bending rules, or rationalizing exceptions. You either kept your word to yourself or you didn't. This builds a quiet self-trust that no win streak can replace. And without self-trust, execution always deteriorates under stress. This is why the rebel does not outsource decisions to indicators, opinions, or signals. Tools can inform, but they cannot author. Only you can do that. And once you take that role seriously, trading stops being something that happens to you. It becomes something you do deliberately. Authorship of execution is not about control over the market. It is about control over participation. That is the only control available, and it is more than enough. When execution is authored, probability can express itself cleanly. Impulse stays silent, structure holds, and identity begins to stabilize. Which brings us to the final shift. The identity shift. At the end of all this, something fundamental changes, not in the market, but in you. This is the shift most traders never reach because it requires letting go of a familiar identity. The identity of the struggler, the learner, the one who is almost there. The identity shift is not about becoming confident. It is about becoming congruent. When structure governs behavior, probability is respected, impulse is irrelevant, and execution is authored, identity no longer needs to perform. It stabilizes. Most traders think identity is built by results. They believe once they start winning, they will finally feel like real traders. But that belief keeps them trapped. Results fluctuate. Identity cannot. If your sense of self rises and falls with your equity curve, you will always trade defensively. The intentional trader reverses the order. Identity is defined first. Results follow. Here's the quiet truth. You do not rise to the level of your goals in trading. You fall to the level of your identity. If you still see yourself as someone trying to succeed, your behavior will reflect hesitation, overcorrection, and urgency. If you see yourself as the author of a process, behavior becomes measured, consistent, and detached from noise. The identity shift happens when you stop asking the market for permission to feel legitimate. You no longer need to prove anything to price. You are not chasing validation through wins or redemption through recovery trades. You already know who you are when you show up. You are the operator of a design. That alone changes how you sit, how you wait, how you act. This is why so many traders sabotage consistency right when it begins. Consistency threatens the old identity. The chaos, the drama, the emotional highs and lows, they were familiar. Structure feels quiet. And quiet can feel empty if your identity was built on struggle. The rebel understands this and does not confuse peace with stagnation. Identity also changes how you relate to time. You stop rushing your development. You stop comparing your chapter 1 to someone else's chapter 10. You understand that mastery is not rushed. It is installed. You no longer need to trade every day to feel productive. You only need to trade correctly. The intentional trader does not say, "I hope this works." He says, "This is what I do." That language matters. Hope implies dependence. Authorship implies ownership. When trading becomes an expression of who you are, not what you want, behavior stops fragmenting. This is also where confidence finally becomes real. Not loud confidence, not social media confidence. Quiet confidence, the kind that does not need reinforcement, the kind that does not collapse after a drawdown, because it is rooted in identity, not outcomes. And let's be honest, this path is not for everyone. Some people enjoy chaos. Some people need excitement. Some people mistake activity for progress. But rebels are different. Rebels are willing to be misunderstood, willing to be bored, willing to walk away when nothing aligns, because they are no longer chasing the market. They are expressing a design. When identity shifts, language shifts. You stop saying the market made me. You stop saying I had to. You stop saying I felt like. Those phrases disappear. In their place, my system allowed, my rules required, my structure disqualified. That is the language of authorship. That is the language of the intentional trader. And this is the final piece of the blueprint. Not strategy, not psychology, identity. Because once identity is aligned, everything else becomes reinforcement. Structure feels natural. Probability feels patient. Execution feels clean. You are no longer trying to become disciplined. You are no longer fighting impulse. You are no longer searching for confidence. You are simply operating as who you decided to be. This is what the Rebel's blueprint was always pointing toward. Not a better trader, but a different one. One who does not outsource authority. One who does not negotiate with emotion. One who does not need the market to cooperate in order to behave correctly. If you followed this series, if something in you feels recognized rather than entertained, then you already know this isn't just content. It's orientation. And orientation changes everything. So here's my charge to you. If you're done reacting, done guessing, done being emotionally employed by the market, then commit. Commit to structure. Commit to probability. Commit to authorship. Commit to becoming intentional by design. Subscribe to Trading Rebels if you haven't already. Share this episode with a trader who is disciplined but still stuck. Leave a comment and tell me which part of the blueprint challenged you the most. And stay with us, because this is not the end. This is the foundation. In the next episode, we go deeper. We move from blueprint to embodiment, from knowing to installing, from understanding to living it in the market. I look forward to seeing you there, not as a hopeful trader, but as a rebel who has chosen intention over chaos. Until then, stand firm, trade by design, and remember who you are.